Hello there. Welcome back to Grade 12 of Economics. In this video, we want to look at a March common test, and this is a question paper of March 2022. And we are going to look at section A, which is the first question of this question paper. So we're going to start on the section of multiple choice. Let's take note our question is got 20 marks, and I'm going to spend on average 15 minutes on this question. So the question says, choose the correct answer and write only the letter A to D next to the question number. Then you are given 1.1.1 up to 1.1.8. The first part of our question is the total value of all spending by households on goods and services is known as dash spending. So we are given government spending, investment spending, export spending, and consumption spending. But we know that the correct response that we have there is consumption spending. So remember the explanation in terms of consumption, defining it from the point of view of economics, it is the use of goods and services by households. So basically, that's how we can define consumption according to economics. So we go to the second part, which is 1.1.2, which is the business cycles that are caused by the changes in the building and construction industry are called contractive. So I would say the correct response that we have there is CASNAT. So in terms of CASNAT, we know that it is also called the infrastructural investment cycles. So basically, it makes it the correct response. Then you go to the next part of the question, which is the public, which is the public sector that is responsible for the overall running of the country, is called dash government. We've got provincial, national, local, international. But according to responses given again, we see that the correct response there is national. When you go to 1.1.4, the difference between merchandise imports and the exports is referred to as a trade balance, surplus, deficit, neutrality. But obviously, this is our trade balance, which is defined as the difference between exports and imports. So the next part of the question, 1.1.5, it reads, a tax system that is used in South Africa to ensure equitable distribution of income is known as the system. And the first part, I would see that it's regressive. Second part, proportional. Third one, we've got flat. And then on D, we've got progressive. But you see that in South Africa, the one that is used is a progressive tax system. A progressive tax system, it entails that the tax rate increases as taxable amount increases. So that's what we have in terms of progressive tax system. Then this is what we have on our multiple choice section. So we go to the next section of the question, whereby we are looking at 1.2, which is saying choose a description in column B that matches the item in column A, right? Only the letter A to I next to question numbers, and then it's from 1.2.1 up to 1.2.8 in the answer book. So in column A, the first item that we have is injections, and injections, they come as additions, additions in the circular flow. Anything that is going to add income in the circular flow is described as an injection. So we try to see within our column B which explanation matches injections. So we go there, we see what explanation can we match with injections. So we see what we have. We go down. We see that we have got F, which says the introduction of income into the economy in the form of investment, government spending, and exports. So you see that these elements of investment, the government spending, and exports, they increase income that is circulating in the economy. So it's an addition to the circular flow. So we take our F as our correct response that we have on the first part. So we're saying F, and then on the real flow. We know that real flow is described by goods and services. Basically, remember we have got the real flow and the money flow, and the real flow is described by goods and services. So we try to see. We have E, which is saying the movement of goods and services from firms to households. So we have E. Then we have got economic depression, but obviously whenever there's economic depression, we are going to see a decrease in economic activity. In other words, they are saying there is a reduction in the quantity of goods and services that are being produced in the economy. So we try to see an explanation that matches that explanation. So we go to column B and try to see what we have. So if you go to column B, if you go to A, there is a concept of economic depression. Then you go to a parastatal, but we know that a parastatal is owned by the government and it acts on the behalf of the government. So basically, that's what we have in terms of the parastatal. So we go again, column B, try to see which explanation do matches that. But if you go to C, it's saying state-owned enterprises that provide public goods on behalf of government. So we have C as the correct response. Then we go to exchange rate. But exchange rate, we define it as the value of currency when it's expressed in terms of another currency. So basically, that's exchange rate. So if you go to G, it's saying the price of one currency in terms of another currency. So basically, that's what we have in terms of exchange rate. Then you go to the last part, absolute advantage. And absolute advantage, try to define it. We can try to define absolute advantage is when for example, when we are talking about production in terms of the quantity that is being produced, the quantity that is being produced. If you are producing the same quantity, we are saying the one that is producing at the lower cost. When you are producing the same quantity, we say if you are producing at the lower cost, you have got an absolute advantage over the other. And then if you are producing at the same cost now, we are saying the one that is producing more quantity with the same cost is enjoying absolute advantage. So basically, that's what we have in terms of absolute advantage. Then we can try to see again what we have in column B that matches that. So if you go to D, it says a country produces a good or service at a lower cost than other countries. So obviously D becomes the correct response that we have in terms of absolute advantage. So this is what we have on the second part of our question, which is 1.2. Then we try to see in terms of the next section that we have, which is give one term for each of the following descriptions, right? Only the term next with person numbers from 1.3.1 to 1.3.6 in the answer book. Abbreviations, acronyms, and examples will not be accepted. So the first part, a small initial increase in spending produces a proportionately larger increase in aggregate income. So basically, this is described with the multiplier. Remember, we've got the multiplier effect, so we can just say multiplier again as the appropriate term that we have. Then we go to the next part, which is saying the price of an alternative that must be foregone to pursue a certain action. So basically, this is opportunity cost. Remember, the basic definition that we have in terms of opportunity cost says is the cost of the best alternative foregone. So basically, that's exactly as we are having in 1.3.2. So we are saying opportunity cost. So we go to the next part, 1.3.3. An attempt by interest groups to influence government behavior to their advantage. So basically, this is explained. We try to pick again another term that we can put there. Explain that this is explained by rent seeking. Remember the explanation of rent seeking according to economics. It states that an individual or an entity seeks to increase their own benefit without creating any benefits to the other party. So basically, that's the basic description that we have in terms of rent seeking. So if you look at our explanation, it is an attempt by interest groups to influence government behavior to their advantage. So obviously, the issue of influencing to your own advantage becomes rent seeking. So here we are saying rent seeking. Then we go to the last part of the question, which is now the 1.3.4, saying the independent factors that can influence the business cycles from outside the economy. So obviously from outside the economy, they become exogenous, but from inside, there is endogenous. So here we say exogenous. So we say the response that we have here is exogenous. So this is what we have on the last part, which is a 1.3.4. So basically, this is the exogenous explanation. So we can just say exogenous explanation. So this is what we have according to the last part of our question, is 1.3. So this is what we have, guys, according to this video. Hopefully the video was helpful. Let's stay tuned for more videos to come. More typical examination questions will be uploaded on this channel, so let's get notified. Let's subscribe and share. And let's share the link to our colleagues who are doing Grade 12 economics. As for this video, I'm signing out. Let's meet again in the next video.